The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the February 6th magnificent Monday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should, be pioneers of our future versus prisoners of our past. Sorry, I had three things going off at once, and I had that little brain fart. But look, I hope you're having a great day. Let's make sure we have an extraordinary day. And the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we're going to go check out the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. And I want you to know that I'm absolutely grateful for your presence here. But more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in. Do it right now, 877-927-6648. Internationally, 727-445-1044. Of course, you can send me an email, steve@tfnn.com. I'll do my best to get your email questions. And inside the Tiger's Den, any ping will do. So let's go ahead and get this show started on magnificent and magical Monday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow trading down 29 points at 20,041. S&P is off 7 at 2290. NDX 100 down 3 points. NASDAQ Composite down 12. Russell is down 12 points as well. Semiconductor index not budging. Second doji in a row out here. Just means it is getting a bit tired up at its highs. Trading out at 964. New York Stock Exchange is up 0.5%, down 57 points. Gold is up $11. Trading out at 1232. We'll go find its resistance. Silver's up 21 cents, trading out at 1769. Hasbro, the toy company, is up $12. Toy doll, you name it. It's up 15%. Abiomed, ABMD is the ticker symbol. That's up $5. Transdigim is up 4. I understand that is being shorted by someone. Randgold Resources up $3. Baidu's up 3. Tesla's up 3. Sevcon is up 3. A lot of threes out there. To the downside, Laboratory something or other, that's off 6.5%, down $9. Charter Communications is off 8. Comscore Inc. down about 8 to 9. Chipotle down 5. LGI Homes down 4. But I want to look at what you want to look at. First question inside the Tiger's Den is, Steve, any chance the S&P 500 completing a big top here as you see it? Now, by saying big top, you mean like a top that will last for how long? So I'm going to have you go ahead and punch that into the Tiger's Den, and then I will come back and answer that question. So I'll first go to gold. Months, okay. Months, more than 2? More than 3? Like significant number of months out there? Going once, going twice? Yes. Okay, so now we're going to go shift back and we're going to answer that question. And the answer that I have for that question is no. I do not see a big top here inside the S&P 500. Now, you may say 6 to 12 months. I absolutely, positively do not see that yet. Now, here is, and I have a number of reasons why. I will give you the one that is, I consider to be the most significant one, and that is the following. Now, I'm going to have to answer that by take a look at the New York Stock Exchange versus the S&P 500, but it's really it's because of the terminology. And I'd like to think Tom is the one that coined King Dollar. I would like to be the one that has coined gobs of liquidity. If there if there was not gobs of liquidity, then I could say, okay, the answer is yes. Now, how do we measure gobs of liquidity? Well, one of the ways that we can determine that with regard to how the market makes a major top is we're going to take a look at the New York Stock Exchange. Now, we're taking a look at the New York Stock Exchange. I'm looking at the advanced decline line. So I'm going to go ahead and pull this up here. Now, on Friday, even though the New York Stock Exchange did not make a new all-time high, just kind of shy of it, the New York Stock Exchange advanced decline line did make a new high. Now, that doesn't mean that the market can't top, that Friday couldn't be a top and the market would pull back. That much, yes, I can buy into that. But with regard to a major market top, the answer is no. Major market tops do not form when the New York Stock Exchange makes a new all-time high in its advanced decline indicator, summation index out here. Go back and test it yourself. You will see exactly what it is that I see. Now, 2 to 3 months from now, or even month, I'll give it 5 weeks. If 5 weeks from now there are certain conditions that take place, such as the New York Stock Exchange goes on to make a higher high and the advanced decline line is not confirming that, then the answer is yes, and there can be a major top. But with regard to, and the only little holdout out here, and it's not really much of a new holdout because you see the New York Stock Exchange did not make a new all-time high on Friday. And so that says that this indicator here, that's just looking at the advancing decline issues. Now, this is looking at the volume summation index out here. And yeah, we can say that maybe there's not a lot of volume inside the marketplace, and that's true. But remember, volume is only one of 4 significant aspects with regard to what a index, a equity, a currency, a commodity is doing out here. So the advanced decline volume indicator did not go on to make a new all-time high. Is that required? No, because we did not go ahead and make a all-time high inside the New York Stock Exchange from a price standpoint. But I am aware of the fact that there's a slight divergence that is out here. It's just something to be aware of. It is not significant until we see a real divergence take place out here. And I'll give you an example and go back. I'll just take a look at the last time that the market made a significant high where we saw a nice pullback for a period of time was back in 2015. Right, so back in May of 2015, the market went from its high, the S&P, well, the New York Stock Exchange, which is really the same. I'm going to say it's not the same, but it's the same as me being able to say, hey, the S&P 500 and the Dow made its top right around then, around May 19th, sometime right around there. And the market didn't go ahead and bottom until February of 2016. Now, that is months, right? You go from May until February. So that's like about, what, 7, 8, 9? Not a full year, but 7, 8, 9 out here. You will see some type of divergence top where you have the NYSE go ahead and make a higher high. Again, we're now back to the advanced decline line, but we see lower tops, lower highs than that advanced decline line. And, folks, if you go back and you just look at this tool, you will see exactly what I see. That doesn't mean from all-time highs that you can't make a pullback, because you most certainly can out here. This is just to be able to answer the question inside the den. Is there any chance the S&P 500 is creating or is forming a big top here, and a big top lasting 6 to 12 months? I do not see it. Gobs, and I do mean gobs of liquidity out here. The other thing with regard to gobs of liquidity really just comes from your friend and mine. That's the VIX index. And the VIX index continues to find significant resistance. That's a bottom panel, that little yellow line. Significant resistance at the 50-day exponential moving average. That needs to start acting as support for any kind of decline to last. Folks, there are gobs of liquidity inside this market. Steve Rhodes with TFNN. You're right. Hi, I'm Steve Rhodes, host of The Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today.
With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's off 41. S&P is down 8. So just to summarize that last segment there, the question was, do I see a big top? And my answer is no, I do not see a big top. Do I see a top? The answer is yes. I mean, and for what duration? Could last through the end of the month to the early part of the following month out there. So I've been fairly clear, I think, during all the shows, all the significant topping patterns, not big top, but topping patterns that are present in the market. Most of those did not go away on Friday, even with that nice move. In fact, some of them were just really a test of a resistance level out there, and that makes today's trading session important. And what I'm really watching inside of the market right now is really just the 30-minute chart out here, and I'm watching this price point that's under attack right now. It's a little hammer candle that formed out here. Nonetheless, you know the expression, if you close below a hammer candle, that's a low from February 6th. That's 22.84. We're trading at 22.84 right now. So this is the big test out here. You close below it inside the ES Mini, and then you have an A to B equals CD to the downside, which I suspect is what we have that's going on as we speak right now. Because really, if we were not going to have that, this is about the time of day, or it should have been about an hour ago, where the ES Mini found some buyers that were coming in. This is weird, a little delay on my system out here. Let me see if I can get this going and draw that pattern. So if this 22.84 fails, geez, why did it do that? Then you've got price objectives here of 22.81. Let me see, 1-to-1. Where's the next one out here? Fib level 2, 1.272. We'll have to make sure I correct that. Fib level 3, 1.618. There we go. We've got that in there. So this would give you targets here, but that hammer candle has to fail. 22.84 must fail out here. Then you look at 22.81, 22.78. I think would more likely be the next target out here. So I just want to make sure I clarify that. Now we had another question out here, with regard to taking a look at DO, Diamond Offshore. And as we take a look at it, we're going to do we'll look at a couple of different charts. The question first was, what is the meaning of today's candle session out here? And with regard to the meaning of it, I'm more interested in really the price action as opposed to the candle session. And so let's take a look at it. And here's really what I'm referring to. So we're looking at a daily chart here for Diamond Offshore, trading right around 1598 at its session lows. The bottom panel of the chart is the price oscillator, which for many of you, that is the same thing as the MACD tool, as long as you set it so that it's looking at exponential moving averages, and as long as you set it to take a look at the 19 and the 39-day moving averages, not like Gerald Appel created, the 12 and 26. Not that there's anything wrong with 12 and 26. I just prefer to go with rocket scientists versus just technology guys. In any event out here, that's neither here nor there. What is here is if you take a look at Friday's action, you see the real question, AG, is, hey, what was Friday's action doing? Because you see, we have this little convergence here. Oops, that's not what I was looking for. We have this little convergence here that occurred right here where you see these two moving averages and Stevie's red line come together. Now, when price pulls back into that level, that's right around January 27th, as that convergence is taking place. And as price was doing, it was moving up into that convergence, pulling that together out there, and price gets rejected. That is actually your first bearish message. What that is telling us is the price oscillator down below is at the zero line. Now, you know the expression. The other one out here, forget about the hammer candle. You close below the low of a hammer candle. If you're long, you're wrong. In this case here, when price has this kind of behavior and you start to get a falling price oscillator below zero, and that's what Stevie's red line really helps us, there is nothing more bearish than that. Now, we've got to go take a look at volumes on the left-hand side of the chart. We'll do that on a different charting package. But here, what we know about Friday's action, as I mentioned, many of the indices that have some of these topping patterns that could last through the end of the month, early part of March out here, came back into those levels of resistance. So it couldn't fool you, didn't fool me out here. And Diamond Shore really did exactly the same thing. See how it bounced right into Stevie's red line? So I'm not so worried about today that it gapped up. The problem is, AG, is that it continues to find the red line being resistance, and we still have a falling price oscillator. Now, let's go take a look at volumes and see what the volumes are doing, and let's take a look at market profiles. As we can see from this chart here, key level where it's already traded into today for Diamond Offshore is going to be 1591. So far, it's gotten down to 1593. Today's volume, 5.7 million shares out here. Now, what we're looking for on the left-hand side out here, let me just do this, is looking for a sign of strength. One could say, well, geez, there was a sign of strength on Friday, right? Well, we know Friday did nothing more than bounce right smack dab into PS daily resistance out there. So that's all it was doing. I'm not calling that a sign of strength if you can't clear resistance out here. Now, again, today's volume is more than Friday's, and we're not anywhere near done with the trading session out here. And it's trading back into these levels that had 3 million shares, 3.4, 4.3. We are outpacing that volume out here. So it is pushing lower with volume out here. So, you know, it's not looking good. Let's put this on a weekly chart out here for Diamond Offshore. See if we can try to figure out where this thing is headed to. And at this stage here, you can see a weekly hammer candle. So I don't know how it works in life, but things happen for us, not to us. AG, you have one more place to be watching, and that is going to be the week that began January 18th. That low out there, 1418, is going to be your number. That is the hammer candle. You close below the hammer candle on a weekly basis. If you're long, you're wrong out here. And where would Diamond Offshore head to? It looks like into new territory. We need to go ahead and put this on a monthly chart out here. You know, so the question is, hey, it's trading back in that hammer candle on a weekly basis. Will that hold? And I don't know the answer. I do know that right now on a daily chart, it does not look good. And in fact, this is trading all the way. My date only goes back to 1995. And so those traders during the month of November of 1995 gathered in on this equity between 1244 and 1244. That doesn't make any sense. What the Sam heck? That's really weird. That's even actually beyond weird why it's saying that. But in any event, watch that hammer candle from that I gave to you, because you break below that, it's not good news. In fact, I wouldn't even be able to tell you where the next level of support is inside of Diamond offshore out here. So now, if it can overtake that oscillator and change line, price oscillator can begin to rise, excuse me, then that's a good thing. But excuse me, it's pushing lower with volume. That is not a good thing. Okay, let's go take a look at Goldilocks out here. I'm sure there are emails that are pouring in as they normally do. Gold looks beautiful. This is a beautiful setup. This is a beautiful setup to continue to move higher. The train has left the station. Now, the next stop in that station, it's just down the tracks out here. Those tracks being at $1,235.60. It's just going to punch the ticket, and then it's going to punch right on through that level. That is its TAS weekly high. How will you know if there is a change in trend, a long-term, an intermediate-term change in trend? You will see that level get taken out. Will it get taken out? I think you know my answer. And the answer is yes. It's not a matter of if. It's just a matter of when. And that when could be just around the corner. Steve Rhodes with TFNN. You're ready.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Nothing like poking yourself in the eye to begin a segment here. Good thing we're not totally on live TV as my eye waters. You'll probably think, hey, what's he crying for out there? And, of course, nothing hurt more than when one of my children, as babies, reached up quickly and cut my eye, put a scratch in it, right? I can't say cut it, but cut it with their fingernail. That hurt like a doozy. A scratch in the eye is never any fun. Apparently, I was trying to do the same thing here as I was trying to rub it out. But in any event, that's neither here nor there. We were talking about Goldilocks earlier, and I could show you about 15 reasons, at least 5 that I know of, as to that suggests right now, 1:31 in the afternoon on February the 6th, that gold is getting ready to bust out to the upside. Not that it hasn't already done that, but this chart here that we're looking at, I'll just weigh in. There was an earlier conversation this morning about gold priced in euros, gold priced in yen, gold priced in dollars, and we can take a look at some of those charts out here. Now, the top portion of this panel is gold priced in euros. You see a nice little declining trend line out here. That trend, declining, is no longer its friend, because what we are seeing here is a break of this area with conviction. Now, interestingly enough, if you go back and you take a look at the studies and look for divergent patterns out here, believe it or not, it is gold priced in euros from a diverging standpoint that actually gives the more important message out here, because we can see that gold priced in dollars has not broken its trend line. Now, price is likely headed up into that area. You might say, well, where is that? It depends on what day it gets up there. But it's in the 1270-ish area out here. We'll take a look at A to B equals CDs. That doesn't mean that's where it has to stop, but that certainly becomes one of its price targets. But gold in euros has broken out as we speak. That is a very bullish thing out here. We can take a look at gold price in other currencies. So let's go do that. Let's turn off the euro chart. Let's go ahead and turn on the yen chart, which has been trading in a bullish wedge out here. Nonetheless, just a wedge pattern. Who cares, bullish or bearish? What we know about these wedgies is that when they form, they can provide us with a nice price target. Now, you can see the descending trend line. That's the top panel of my chart out here inside of gold priced in yen. And you can see how price is breaking above that level. You can see the nice little rising trend line out here. We're not to the apex of this pattern, but nonetheless, it looks like we have a break. And you can do the measured move of this just simply by going from the bottom of that trend line up to the top and then taking that and adding it to where price breaks above that. That would probably just tell us that price in yen, you're getting back to this 146,000, 14,600, 146,000 yen per ounce out there. But that's neither here nor there. The point is that you're seeing a breakout inside of yen. We could take a look at it in other currencies as well. What else do we have out here? We've got the South African rand. South African rand, that's the top panel of our chart, has not broken out just yet, but that's soon to happen out here. We can take a look at it in Australian dollars. Australian dollars, that's the bottom portion of our screen. It's just broken a short-term trend line on its way to the next. The bottom line here, if there is a bottom line, it is this chart again, which is gold priced in euros. And this is a leading indicator out here. It says it's really just confirming what it is that we already know. Now, you and I and AG, we took a look at Diamond Offshore, right? We took a look at that pattern associated with, again, the price oscillator, but really Stevie's red line and the convergence of those two exponential moving averages. And we know that the bullish price behavior, in this case here, because that was bearish in Diamond Offshore, but the bullish price behavior works the exact same way. In this case here, just the opposite. Prices were moving higher. And as this little convergence was taking place, price was moving back into it. Yeah, it closed just slightly below it for like $2. Not a big deal out here on a $1,300, $1,200 instrument out here. Price was doing what it was supposed to do. Now we have boinged, right, the trampoline. We have the boinging trampoline effect off of that line. That was your test. That was your, if there was going to be a bearish outlook, that was the test. You would have seen price close below that area. It would not have held the support. You would have had a falling price oscillator below zero. Do we have a falling price oscillator below zero? Absolutely not. we have a rising price oscillator above zero. Nothing more bullish than that out there. That's gold. If we take a look at silver out here, and I've got the continuous contracts up on my screen, that's really not going to be a problem here because we can take a look at historical data if we wanted to. So let's actually, and silver actually, I believe, behaved even better, but let's still just take a look at, let's just confirm, here, yeah, you can see this. It never got to close below Stevie's red line as that convergence was taking place. So this looks awfully good. Now, you want to use awfully and good at the same time? Probably not if you're going to go ahead and write up an article on how was your meal last night. It was awfully good, but probably not the best choice of words out here. But it does look awfully good. You have to admit, just use your imagination when it comes to gold. So that's only two of the reasons. I could give you a third one, but you don't really need it. Now, that doesn't mean that gold is not going to run into some resistance out here. We already talked about that, and that is at the 1235 level. I'm giving you the longer-term view as we speak right now versus, hey, what is gold doing on a 10-minute basis, or what is gold doing on a 120-minute basis? And I don't know the answer to that. We could go figure that out, but I know that's not really where you want me to spend my entire time out here. So all looks good in Goldilocks land and in hi-ho silver out there. Again, silver is trading up 19 cents, about 1%. Gold about the same, 0.9% trading up 11 buckaroonies out here. So, okay, we've taken a look at gold, kind of the markets out here. What do you want to look at next? Somebody can type something inside the den. You guys lead, I'll follow, and I will tell you that I'm not going to really talk about the game, but there's nothing left to be said that probably has not already been said out here, other than my favorite commercial. And I don't know what was your favorite commercial. My favorite commercial, I can't remember the name of the car company out here, but it was after the game. Right, it was after the game, and it was a car commercial. I think it was it was a car. I think it was a car commercial. And they went out to either Bagram Air Force Base or one of the bases out there, and they brought these. Each individual. So I guess at the game in Houston at the Super Bowl last night, they had some families from some of our military folks that are overseas out there, and they brought them into this room that was this amazing, 300. It looked like a 360-degree screen area where they got some private time with their family. And to me, that was the touching story of the commercials that I saw out there. Some of them were okay. If you can't remember the car commercial and it's not a good commercial, I was more focused. Look, it was a great commercial. I was not in the market for buying cars, so it really didn't matter to me with regard to that. To me, that was maybe somebody saw that commercial, or maybe somebody can figure that out out there. To me, that was the greatest commercial that I saw. I didn't really care that much about the other commercials. I thought they were really kind of so-so out there. Have there been better commercials in the past? In any event, so what do you want to look at next? Nobody's typed anything in. That was really like a strategic pause for somebody to help lead me as to what you guys want to go ahead and take a look at. And this show is for you and trying to assist you with regard to putting an extra set of eyes on something that you are taking a look at. Dollar Tree. So we'll take a look at Dollar Tree when we get back from this break out here. I don't see any emails that have come in. And anything else that you'd like, just go ahead and type them in on the den. Any ping will do. Steve Rhodes with TFNN. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. So I thought it was Hyundai, and I got an email here saying that it was the Hyundai commercial. So I'll go track it down after the show out there. And if you didn't see it, you should see it because it was actually I thought it was a very cool. I thought it was the best commercial. Inside the, I think it's just best commercial, period, Super Bowl or not. Okay, so Dow's off 38, S&P is down 8. Not getting a lot of requests out here, so let's just go take a look at some individual stocks for the next 8 minutes or so. Let's take a look at Hasbro. Let's go see what Hasbro is doing out here. HAS, ticker symbol up 14% or $12. I'm surprised I'm not getting a news feed out here. Well, that's because it says Public Companies Canada. Well, no wonder I wasn't getting any news feeds out here. That's you know, you got to check to see where your system. So yeah, they're out with numbers out here, and the market is liking. They're digging what it is Hasbro has to say out here. Of course, you know, they're coming out of their great quarter, right? You know, Santa's workshop was working pretty nicely. So where is this trading in relationship to all-time highs out here? Let's go. Well, it's there. So everybody inside of Hasbro is having a great, grandiose time. This now on a, let's not look on a monthly. Let's just look on the daily basis. So you've got a big, huge, wide-ranging bar. And I do mean wide and ranging out here. You know, where's this thing headed to? Lord knows. I'd probably have to try to set this thing up on some, well, it's a big A to B equals CD. That's pretty simple out here. Your A point on a daily chart takes you back into about December of 2015. Your B point is up here in, where would that be? April 2016, and your C point of this lightning bolt around October the 14th. So it's on its way up to 99.76. Could get higher than that. Could easily get to 106.18. One of the wider ranging bars with volume that Hasbro has to offer for us. Let's take a look at what else is moving to the upside. You've got AB IOMED or IA Biomed, ABMD is the ticker symbol. Now, this doesn't look as healthy as, how do you like that? Got that health right into that whole thing out there. If we do take a look at this equity, probably going to have to look at it on my other screen out here. AB, let's go see, maybe just trading up into its oscillator on change line for all I know, ABMD. And the answer is, yeah, 107.4. 107.45. It's actually trading above that. So it is trying to change its trend out here. This likely is going to head up into the price point of about 117.82. I would expect it's trading right now at 110.75. So looks like it should have about another $7 into it before it runs into its next level of resistance out here. Let's take a look at TransDigm. TDG. Been meaning to look at this. You've probably seen all the reports that I have. Some famed short seller is all over this thing. Of course, famed probably because they were shorting it up in the 292 range, not in the 223 range out here. So nonetheless, TDG is the ticker symbol out here. This used to be one of the movers and shakers inside the IBD. Don't know where it is any longer and whether or not it's inside the IBD. So what do we know out here? I would have to say what we know is just making a little counter trend move out here. Brand new weekly profile that has formed today. You're trading above the daily. Looks like this is really headed up into the 236.01 level. Now at 236.50 is where this thing had a nice little sign of strength. It has broken below that with conviction, so it makes sense that that becomes the next level to consider selling from if you're looking to get short TransDigm Group. I never really read anything about it, but you know, it is what it is out there. That's probably where it's going to find its next level of resistance. I got a Peter in Park City. How's the skiing out there, Peter? Got to be great this time of the year. And did you go ski yesterday? Did you ski on a Super Bowl Sunday? That would be the thing to do. Peter is saying, hey, the yen is starting to move. And, you know, if the yen is starting to move, then we know that gold is starting to move. Now, remember, we talked about gold having a little resistance zone. And in the case of the yen, it's got a little bit of a support zone. So both of those two twains, not Mark, but those two twains shall meet. And as we take a look at it, its twain, its level that it's headed down to, its level of support, is really 111.67. And that's the area, Peter, that you and I and the others need to be paying attention to. Because, in fact, gold could find resistance at the top of its weekly profile. I mean, you have to expect that it will. That doesn't change the outlook with regard to what gold is doing. And the yen ought to find support at the bottom of this box, although we can take a look at these weekly profiles and say they're pretty much equidistant. They're right smack dab in about the middle. So this box, this trading range out here, is not biased to one side or the other. 111.67. If, in fact, we close below that, then, in fact, the gold will go ahead and take out its resistance zone. I anticipate that it will. The new trend inside of gold started a few days ago. First, we saw that test of that oscillator on change line. Then there's something else that Stevie shares with subscribers out here, another tool. It's a tool that I've taught about on occasion in the show, but I have to keep some of these things just simply for subscribers. That shows that that new trend really has already begun, and that new trend is to the upside. So I'm expecting that the yen is going to fail when it gets down here, and that gold is also going to be able to break through resistance out here. So, yes, I'm glad to hear that the yen is moving. Thanks for pointing that out, and glad to hear that you were skiing. There's nothing like getting to the top of one of those peaks out in in Park City, in Colorado, any of those large mountains out there, and then looking back at all those beautiful small little towns. They look small from up high. It is truly God's country out there. Right next to playing golf, my favorite golf course in Lanai. That also, and watching the whales jump out there, and then knowing that really pretty much you're only out there with, on the island, I don't know, maybe 100 visitors or so at any one time out there. In any event, you didn't really want to hear about that, but I had to harken back. Okay, so what are we going to look at? Let's look at some things that are moving to the downside out here, like Laboratory Corp, maybe, LH. What is that? Yeah, Laboratory Corp, LH. Down $9, that's 6.5%. Ooh, that's a wide-ranging bar to the downside out here. And this thing, in essence, came right back to resistance resistance. That resistance having nothing to do with its market profiles out here. If we turn those off, which we will, we'll see the gap to the downside. Remember, gaps are our friends, both to the downside and to the upside. Just like you like to buy a gap to the upside with it coming back to support. In this case here, LH Laboratory Corp came back to resistance. Huge wide-ranging bar to the downside, October 26th. Volume there, 3.9 million shares for this equity. That was big volume to the downside. Got back up to where it had broken down on Friday with 500,000 shares. So moving to the downside, I don't know if they were out with earnings, doesn't matter. It was really trading right back into a level of resistance. Where is this headed to next? Well, now we'll turn on those profiles, see what kind of meaning, if anything. Says here that this is going to head all the way back to its bottom in the 121.59-ish type area. That is ticker symbol there, LH. Not to be confused with lean hogs out there. And there's probably a bunch of lean hogs that were eaten yesterday for the Super Bowl. Congrats to the Pats, and condolences to the Falcons. What a game. Steve Rhodes with TFNN. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's TigerTV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors. Join David Dwight as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Dow's off 22 points. S&P is down 7. NDX is off a couple of points. Let's just check out the volumes here a little bit. Let's go take a look and see what the SPY is doing as we speak right now. Still really an inside bar. Trading inside of Friday's session out here. Volume thus far today is 30 million shares, so there's really nary volume out here. Moved higher with 80 million shares. Now, price was pushing on Friday into a swing point with volume. The swing being the trading session of January 26 at 59 million shares. So until this thing really closes, well, it's more so the ES Mini probably in overnight action that will put some selling pressure into the market. But, you know, if you're just going to look at the SPYs, this says that it still wants to go test the highs out here from January 26, although it doesn't have any volume, but it's an inside bar, and that says that a continuation of the trend that it came from is the way that you would want to go ahead and read that. The QQQ series ETF out here, volume today of 6.6 million shares, so it's not doing much other than what appears to be distribution going on up at the top here with such light volume. And it has had majorly light volume, 15 million shares up at the high, then 20 million shares, 15 again, 16 million shares today, 6 million. It's going to be even less than it was on Friday. So this is classic. Now, again, what I'm anticipating here is, and the question to open it is, do I see a big top? And instead I see a top. I just don't see, and where that price is going to take us to, I've got some ideas, but we can talk about that later when we get a confirmation of it. But I do see a market that wants to pull back. When does it really want to start pulling back? You know, if I were going to give you a date, I would say specifically Thursday. Just simply as a date, and it's not something I'm just pulling out of wrong. Thin air. You thought I was going to say something else, but I'm not just pulling that out of thin air. If we take a look at the IWM, 14 million shares today. So really not doing a whole lot volume-wise. Last time it was to the downside was with 40 million shares. The Diamonds DIA, Lucy in the sky with diamonds. Out here, its swing has 3.9 million shares. Diamonds actually have some pretty decent volume, just decent volume to the upside out here. You only did 4.8 million shares on Friday, so it doesn't look like it's going to take that out. But as far as the ETF structures out here, it's not tipping its hand that it's ready to move lower with any kind of conviction out here. The conviction in the market is coming from gold, from silver, from the yen, and in fact that move lower in the yen ought to get bonds moving to the upside out here. The question is, can that move overcome the intense selling that is in there? And when I say intense selling, I don't mean on volume. What I mean is that somebody, it appears, is really not trying to tip the canoe over out here with regard to bonds. So they're keeping that selling kind of light as they try to convert those portfolios out there. And Lord knows they are overweight when you take a look at wealth management clients inside of the big firms out here. So with regard to the 30-year Treasury, if it can bounce the 153 area, that should be its next sign of significant resistance out here. But the yen is going to give it a go, and you ought to see the Treasuries really try to pick it up. My hope is that we really do see Treasuries set up this nice Gartley sell pattern so that you can unload, buy the TBT, back up the truck, all those kinds of things. But you probably can't do that till we get bonds up into the 157-ish type area. So, folks, stay tuned. It's Magnificent Monday. You know what that means. Our favorite polar bear, David White, he's up next. Then we've got the Tom O'Brien Show from 3 to 5. I'll be back with you at 3:15 for just a quick, brief period of time, and I'll provide something new for you. Take care, folks. Have a marvelous Monday. We'll see you on Terrific Tuesday.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, accurate active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.